We all know the markets are extremely volatile at the moment, and I spoke to Ulrich Krach about how he manages risk.
Basically what the technician will always say is the ultimate fundamental is the price. And I think that's what you're seeing in the market. I mean, basically the Forex market is the biggest market in the world. So all the information is instantly incorporated, and unlike commodities or equities, it's a 24-hour market, so there's really no chance for gaps, there's no insider information. So you have the information reflected immediately in prices. I think that's the main benefit when you're looking purely at price and price indicators.
So is it a case that once this recession's over and things calm down a bit, will you start to look at fundamental news more, or is this something that's permanent to your strategy?
I mean, I've been trading technical for about 10 years, and that's the style that I'm comfortable with. I like to see fundamentals to see whether they confirm the technicals, but I'm not a fundamental trader, and I don't think I'll ever really focus purely on the fundamentals, because fundamentals are always looking at the past, right? With the technicals, it's always looking at the future, and I think if you want to be a very good trader, you always have to know just the demand-supply relationship in the market. I think even if you know the fundamentals, if you understand part of the technicals and the demand-supply picture, I think that really helps you in the marketplace.
But is it a case that you totally ignore fundamental news if there's a major interest rate announcement coming up and your technical analysis is telling you something different to what you think might happen? Is it a case that you'll still stick with your technical analysis?
I think the market is always right. I mean, that's been always my philosophy. It's served me well. And if the market is moving a certain kind of direction, most times, I mean, like 9 times out of 10, you're going to see that the market is correct. It's forecasting the event correctly. So there's very few big surprises out there that wouldn't be taken care of with the uptrend, downtrend lines that encompass an entire move, basically.
How long do you see this high volatility going on for?
We've never really seen that high volatility will stay very volatile. I mean, right now we are becoming more volatile. So I actually rely on technical analysis even more than I do. I mean, I still take a look at the fundamental picture, but technical trading is what I do. It's always a shift between high volatility, low volatility. The market will calm down. We will get to a lower volatility kind of environment. So I mean, this is not the normal state of affairs, basically.
But you're happy with the volatility, because obviously that means potentially more profit for you.
That's exactly the way I see it. I mean, when the move happens quicker, it's easier to cash in. It's easier to get to a support resistance kind of level. So actually, the volatility plays right into traders' strategies if they have a good strategy.
So what advice would you give to traders to become the next Dukascopy Trader of the Month?
Basically, I have 6 rules that I work with, and I basically tape it to my computer because these are the rules that you should always be looking at. The first rule is, keep it simple. A lot of people have very esoteric systems and reversal systems. The simplest thing you can do is drawing trend lines, using MACD, RSI, drawing trend lines on those, using the 100-period moving average, whether you're a shorter-term trader, longer-term trader. The 100-period is a defining line between bull and bear. So those are simple systems. I think key for anybody is risk management. You never want to lose more than 5 or 6%. You want to use trailing stop losses. You want to let your winners run. I mean, every trader will tell you that kind of thing. Number 3, I already mentioned before, is like the market is always correct. If you're going against the market, you think you're smarter than everybody out there trading the Forex market, you're going to lose. The market will always be stronger than you. Number 4, I basically always trade with the trend. You don't want to go against the trend, so I would rather sit out of the market until I see the next support, next resistance. Rule number 5 is if you're a day trader, it always makes sense to look at weekly charts or look at 60-minute charts. You can zoom in, zoom out. I mean, this kind of volatility, I think when people are on the wrong side of the market, it's because they didn't look at the larger trend and the smaller trend. I think that gives a lot of perspective. When you zoom out, you can see the bigger trend, and as long as you're going with the bigger trend, you're going to do a lot better. And lastly, I think in any kind of asset class, you have a risk-on, risk-off trade, which is very much dependent on the US dollar. Right now, we're very much in the risk-on trade, so the US dollar is going up, and I expect the US dollar to continue going up. So as long as you keep moving with the big trend, I think you're going to be okay.
That's it for now. There's plenty more to come on Dukascopy Forex TV, so stay tuned.